Hello and welcome to Blytheway Business News, where for this edition, I'm joined by Mark Child, who is Chairman and Chief Executive of Condor Gold. Condor is listed both in London on the AIM market with a ticker of CNR, but also in Toronto on the main market, the TSX, a ticker of COG. The company has a market capitalisation of around £61 million and currently a share price of around 46p. Mark, welcome back on the programme. For those viewers who may not know, part of the answer, the clue is in the name, Condor Gold. But tell us where you are, where you're operating, and what stage you are at.
Yes, well, good morning, Tim. Condor Gold has 2.4 million ounces of gold, mineral resources and mineral reserves in Nicaragua Atlantia project. Of that 2.4 million, half of it is open pittable and half of it is underground. And of the open pit portion, we've focused on permitting that. So we now have 3 pits with fully permitted 1.12 million ounces of gold permitted for extraction. That includes the permits to construct and operate the mine. So it's a very advanced project. We have 4 drill rigs on site at the moment. We're doing infill drilling and resource expansion drilling. And we purchased a mill. And importantly, we think we're on a 5 million ounce gold district, so we can double the ounces.
It's a gold district. Now, people drill and then they start buying kit to build a mine. You've just bought a mill for the La India project. That estimates, I think I've seen 80,000 to 100,000 ounces of gold. Tell us a bit more, though, about the mill, purchasing it, and what that means for the project.
Okay. Well, the mill is brand new. We bought an entire SAG mill package, it's called. And this is quite big. To give you an idea, it's 24 foot in diameter and 17.5 foot long. So that's the size of the mill. The mill itself is the central part and the long lead item of any processing plant. So either side of that, you've got a jaw crusher, belts, the mill itself, then you've got gold rooms and tanks and cyclones and the rest of the processing plant. So we bought the long lead item for $6.5 million. We bought that off First Majestic Silver, a TSX listed company with over $4.5 billion market cap US. And they took $3 million of the purchase price in Condor shares at 50p, so a slight premium to today, which is a great vote of confidence in the project and management team. And the balance we're paying in cash, we paid 90% of it. So we have about $500,000 left to pay. The first shipments have arrived already in Nicaragua. I had photos through the last 24 hours going into our warehouse in Nicaragua. So it's really advanced. And what it does is it fast tracks the project because it was 100% built or 90% built, ready to ship. But they cancelled it. So we stepped into their shoes. And normally mills take 45 weeks to build from scratch a brand new bespoke mill. And this one fits our project perfectly. So it cuts our lead time by 12 months. And the other thing, just on the production ounces, Tim, you're right. We said in the announcement 80 to 100,000 ounces of gold production on 3 grams, that would be. So on our reserve numbers, 3 grams. But if we high grade that and put 4 grams through, so we put the first couple of years we put 25% higher grade through, we would be 97,000 ounces. And on a slightly bigger motor, we could get it to about 117,000 ounces. So I think it'd be fair to us to say we're really thinking 100,000 ounces from the get-go for this when it's in full production.
Okay. So the mill is now on site, big step forward, and great timing in stepping into somebody else's shoes and picking that up. And as you say, saving yourselves significant lead time. You've also appointed a lead engineer to develop a feasibility study level design for the new processing plant at La India. That's clearly significant, but how significant?
Well, we've had a stroke of luck because the lead engineer we've appointed, who I met in Tucson, Arizona about 7-8 weeks ago, when we selected them, we interviewed 5 people to design the mills. They wanted, it's called Hanlon Engineering, which is, excuse me, owned by GR Engineering, an Australian listed company in Brisbane. Got 70 metallurgists there. And they build mills and design and build mills. That's the key thing they do. So a very experienced team, which de-risks the project for us. But importantly, they designed this particular mill for First Majestic Silver, who we bought it off. So they worked on it for 18 months to 24 months. And they were awarded the contract to do an EPCM contract to build the new mill, which was then cancelled at the San Dimas mine in Mexico. So they had all the drawings, and they're basically able to take all those and then adapt them to land your project. We had one of their lead design engineers on site 2 weeks ago, so they've already done the site visit, which they need to do, and we've located the processing plant internally. But these specialists will say, "Well, move it 50 meters to the left or right." So we've gone through that, but it's really significant, and it gives us, importantly, a plus or minus 15% capex number, plus all the design. So we get all the design drawings with this study and that'll help us get bank finance or debt finance of some form to advance the project. So it's a material signing to have them on board.
You've also just given us news on the drill intercept program at the Cacao prospect, which has the potential to host a significant amount of gold. Give us a quick update on that, please, Mark.
Yeah, certainly. Well, we're into exploration. This is the second part of the strategy. How do we demonstrate we've got 5 million ounces? Well, it took us quite a long time to get permits, and permitting at any project, as anyone who's tried to do it in South America, which we've done successfully, takes time and invariably has challenges. But we prepared the ground with a lot of scout drilling. So Cacao has today 60,000 ounces of gold on it, independently verified by SRK. It's only on 500 meters of strike. And what this program is doing with 5,000 meters is we've drilled about 2,000 beneath it. So where does it come from? But the whole, and the drill result we put out was 14, if I round the numbers, 15 meters at 4 grams. And that's got a lot deeper as it's gone down. The important thing is that Cacao and the whole south of the Highway Fault looks like it's a completely preserved epithermal vein system. So we don't know how big this is, but it's big, we think, because the strike length for this vein is 4,000 meters. It's not, so we've got a little bit, 60,000 ounces on 500 meters, and it's been relatively shallow to date, say 100 or so. We're now drilling along to test this for 3,000 meters of the 4,000. That's part of the program, just to see if it exists. So it's riskier stuff. Where does it come back? Does it not? There's always risk with this. But importantly, we've got a big dilational opening, meaning it's over 10 meters. So you've got the width there for the gold to come through. And as we drill around this deposit, you will find the 10-gram material stuff will come in. And the question is this the next Langier vein? Is it another 1.5 million ounces of gold? That's what we'd love it to be. But I don't want to get carried away. I say that we got to drill it, and the drill bit tells the truth. But it's exciting, and it demonstrates we're on a major district.
Well, I think you've been on the show so many times, Mark. I think we're now starting to get the picture of this huge gold district that Condor is sitting on. But I do recall the last time you were on the program, you were telling us about this near surface, or the near surface opportunities you had, which might actually bring cash flow closer to us in terms of the timing of this project. Now, even more recently than the Cacao results, you've just got some results back today showing, I think, over 6 grams a ton near surface. Just talk us through that and what it means for Condor.
Yes. Well, this is a separate program in the main Langier open pit. So this is the main big permitted pit, which has 900,000 ounces of resource in it and a reserve of 675. And what we're doing here is we call it the starter pits. We're infill drilling to 25 meter spacing, which is the last drilling. We could take it to the measured category that we need ahead of extracting the gold. So it just confirms it up. And the drill result we announced today is 8 meters true width at about 6 grams, 6.5 grams of that order. A great intercept. And this is within 35 meters of the surface. It's just beneath the pit, actually. This one starts about 30 odd meters drill depth. But these starter pits have about 60,000 ounces of gold in them within 35 meters. And if you use 1,700 gold, which people are for planning at the moment, you would say that that's $90 million worth of revenue. It's operating profit, obviously before sustaining capital and before tax, but the operating profit will be about 60 million. And it's from the surface. This is great to have that sort of $60 million of cash flow to sort of, which we could mine that in 6 months. So that's only 6 months of production for our new mill. So it is significant that we've got no negative surprises. And indeed, it's some of these drill results. We had another one out, which you would have seen, of 24 meters at 6.5 grams. These are very wide at surface intercepts. So it's fantastic for early cash flow and quick payback for the mill.
Well, I think looking at the comments from some of the mining analysts in the city this morning, there's one guy who's saying this is very high grade and will lead to early payback, and he's seeing fair value in your share price of around 130p. And as I said at the top of the show, you're currently around 46p. So clearly positive news being very well received. Condor, not a company to rest on its laurels despite all this progress. What have you got in store for us in the coming months, Mark?
Well, staying with Landia starter pits, we've completed just outside the pits another 1,000 meters of drilling, and we're waiting for those assay results to come back. So they're not released. So the market, and this was replacing some RC, reverse circulation holes, with diamond core drilling, which is a better quality for confirmation. And so we'll be releasing that to the market over the next 3 to 4 weeks. We're waiting for only half the assay results to come back, but we've got some good news there. The second thing that we've got 2 drill rigs up on the Mestiza project at the moment. This is one of our permitted pits. It's a 120,000 ounce resource at 8 grams, so super high grade. And the MILF, the produced gold out of that, we estimate is about 85,000 ounces at 5 and 5.7 grams. So we haven't got any drill results back from that, but there's 8,000 meters of drill results. And Mestiza, again, in terms of game changing, that would be around about 84,000 ounces at those grades at 5.7. This is open pit again. It is $140 million of revenues and $100 million of operating profit, if that comes back. But we've got to drill it much tighter to this 25 meter spacing before we can mine it. So you've got 2 areas there that I've just given you numbers, which could go through the mill in the first 12 to 18 months. So really giving you a quick payback. So we're doing that. We're doing the site clearance and preparation. We will update the PEAs this quarter. So we're going to do 2 PEAs. We did the last 43-101 formal reports we did was 6.5 years ago. And there'd been a lot of material changes, like we bought all the land pretty much, and we bought a mill, and we permitted the project, and we moved a waste dump. And so we have to update those, and they'll show a total open pit production scenario, and that plus underground, so we can see what the project could do at a max with including our inferred material and PEA level. And that'll be out, I hope, in the next month to 2. So that'll be something to market to look to update all our numbers, basically. And then we will do an FS study. So the final bankable feasibility study, somebody called that. So, and of our engineering studies, we're kind of like halfway through those at the moment, probably, and some of them are 85% done, like the tailing storage facilities, 85% done to an FS level of design. We've got the drawings issued for construction already for that. So we're really much more advanced, I think, the market gives us credit for in terms of the engineering designs for the mill that we just purchased. So, and we'll do the layout with Hanlon, by the way, so that we can double capacity. So that's the idea. So, okay, we bought this mill, but what if? So that's how it's being designed for us. So we've got a lot on our plate.
Well, no shortage of news flow from Condor Gold. Thank you, Mark. That was Mark Child, Chairman and Chief Executive of Condor, which is operating in Nicaragua, listed on the AIM market and on the Toronto Stock Exchange. That's it from Blytheway Business News for today. Thanks for watching.